Hey guys, it's Carlos back again with another video explaining and simplifying insurance for you. Another question we have today is, what is a homeowner's policy? Well, the name itself makes it pretty simple, right? It's an insurance policy for homeowners, people that own homes and live in those same homes. And it provides great comprehensive coverages for you as a homeowner, not only covering your dwelling but also personal liability and loss of use, which is what we'll look into in a bit. But it's one of the most popular policy, probably second to auto. And I wonder why. It's not like the US economy is supported by the housing market, right? Right? Just to let you guys know, I'm based in Texas, so I'll be mostly talking about Texas insurance. So what I talk about, the details and coverages, might be different, might be similar to where you're located. And also keep in mind that the coverages and other special additions to your policy have limits. They are not unlimited. I don't want you guys thinking that,
oh, it's free insurance money.
no, insurance is not something to be profited off of. Insurance is to help you get back on your feet. So keep that in mind, guys. So with that said, let's get into it, guys. So the first coverage we'll always find in a homeowner's insurance policy or insurance deck page is coverage A. Coverage A is dwelling. It's abbreviated coverage A just to make it simpler, or sometimes even more complicated than it needs to be, but that's what it is. Coverage A protects only your dwelling. The dwelling itself, no personal property, none of that. It covers, the wiring, the walls, the roof, the countertop, the tile, whatever makes your house your house. Coverage A, dwelling coverage, is what protects you. So keep in mind that limit. That's what the insurance company might give you depending on the damages occurred on your property, on your dwelling. And after that, we go to the next one. So now we jump into coverage B. Coverage B is otherwise known as other structures. Other structures is basically what it sounds like. It's anything that's not attached to your house, directly attached. So this would include fences, detached carports, or even a little tool shed you might have in your backyard. Anything that is part of your property but isn't directly touching your house. Let's hop on to the next letter in the alphabet of insurance, coverage C. Coverage C is personal property. Personal property is everything that's not directly, physically attached to your house. It's things your family has bought and put inside the house. Like this could range from furniture to shoes, and even that 98-inch 8K Samsung TV that's worth a whopping $60,000. But of course, guys, be mindful of your limit. There are a lot of different limits that can range from 20% all the way to 80% of your coverage A, coverage dwelling limit. So to make it a little bit easier, let's do 200,000. 80% of 200,000 is, let's make it easier. Let's put it 100,000. Your dwelling limit's 100,000, and you have a personal property limit of 20% of that. 20% of 100,000 is 20,000, and the same goes for 40%. That's 40,000. That's the limit the insurance company puts on your personal property. So just give that a double check to make sure everything you have in your house doesn't reach the limit, or if it does, you might want to increase that. But also keep in mind that there are some specifications on what you could actually insure under personal property. Items that are extraordinarily or are crazy expensive are usually excluded from this coverage. This can include jewelry, paintings, gold, silverware, even stuff like glass, specialty glass, can be excluded or can be reduced limit. So even if you have 40% of your coverage A or your coverage dwelling, or 20,000, let's say, they have their own limits on, let's say, silver. Silver may be 500, or it may be even lower than that. So again, check on your deductible, check with your local agent for more details about that, because there are special policies that can help you insure those high value items, either by scheduling it in your homeowner's property. Some companies give you the ability to do that, or getting a separate policy for it, which could be extremely cheap since it's usually low risk. So we did the A, we did the B, we did the C, now comes coverage D. Did that rhyme? I think that did rhyme. But this coverage is known as loss of use, and it's my favorite coverage because it's the most practical coverage there is. Insurance companies know that while your house is being repaired or reconstructed after a huge loss, you can't live in a house that's being constructed. You can't live in it because there's paint buckets on the ground, there are power tools, there's dust in the air, there's drywall here and there, and so much that goes into building a house. It's not a safe environment for a family. Totally not safe. So the insurance company has this coverage specifically designed for that. They reimburse any of the charges you incur while your house is being repaired or being rebuilt. These charges could be hotel costs or rental property loss or gas that you've incurred moving your stuff from here to there, or even food that you have to buy for your family. So it's a very useful coverage for families that have lost it all in a covered loss. So I really do appreciate it, and I know these families definitely do. But again, I'm going to say this with all the coverages. This has a limit. This is usually a 20% again of coverage A or coverage of dwelling. So keep in mind how much you pay or how much the insurance company has as a limit for coverage A, and do 20%, or depending on your percentage for loss of use, double check that to see, make sure that that's enough for your monthly expenses. So now comes coverage E, which is personal liability. Personal liability definitely comes into place a lot in insurance. Personal liability is basically, let me put a scenario. A neighbor comes into your house and he trips and breaks his arm. And he blames you for something that may have happened. Maybe a rug was slippery, maybe the dog tripped on him. So many things that could happen in a lawsuit, of course. But the company would have aside on your homeowner's policy a set amount, usually ranging from $25,000 all the way to $500,000, and this amount is used to defend you in legal matters. So again, I put the scenario of a neighbor, because there are three types of people that are excluded from this coverage. First of all, it's you, because of course you can't sue yourself. Second of all, it's family. And third, it is workers, people that are working on your property. These are the three types of people that are specifically excluded from these coverages. And of course, for more details on if there's additional exclusions or what involves into this coverage, check again with your company, with your deck page, and with your local agent. After coverage E comes coverage F. So they're both sort of similar, familiar. I'll take the same scenario as coverage E. A neighbor walks in and he trips and he hurts his arm, but he doesn't decide to sue you. He's that great neighbor you love. Maybe that Steve, that Martin, whoever it could be. They decide not to sue you, but of course, they have to go to the hospital or urgent care or first care. So they do have medical bills associated with it. So with this coverage, you are able to help them out a bit. And of course, this does range from $500 all the way to $5,000 on your ability to help them out with their medical bills and their medical payments. So that's what an insurance policy is, guys. It's something very important. It provides so much coverage for homeowners or people that are looking to buy homes. Your mortgages are going to ask for probably this specific policy, a homeowner's policy. So just appreciate the fact that it has so much coverages and protects you. It really does protect you as a homeowner. And of course, what I talked about is a bird's eye view of the homeowner's insurance policy. So make sure you look into your company, their specific or their specifications as a company, or also the policy you bought from them. And for any more detailed questions or concerns about your specific policy right now, let me know. Hopefully I could help out if you're in the state of Texas. Or if not, speak to your local independent agent. They'll definitely be able to help out in this specific scenario. This is my take as a licensed insurance agent of what I see on our homeowners policy in the state of Texas. And it's a bird's eye view. Of course, there are specifications to your specific companies and specific policy you bought from that company, so keep that in mind. But apart from that, I hope you guys learned something. Hopefully there's some practical knowledge you guys can make use of, especially if you're buying a house. Mortgages do ask for a homeowner's policy, so that's something definitely to keep in mind. But thank you for joining me, and don't forget to like and subscribe to this video. It makes the world of a difference. It means so much to me. If you could turn that like button blue, wow, I really would appreciate it. So take the time, take that 1-2 seconds to do that, and I'd really appreciate it, guys. So subscribe to the channel if you like more content like this, and you could enjoy more, and I can make insurance simple and easy for you guys. So take care, guys, and see you next time.